Traders focus on bearish global supplies reported by USDA, sending prices lower. Is there hope for a turnaround? Senior editor Bob Bergdorfer is just back from Brazil. Are the crops there as big as feared? Labor troubles threaten shipping off the West Coast, while crises rage in Greece and Ukraine. What's the impact on agriculture? We'll have these stories and more on this edition of The Buzz. USDA's February reports typically don't generate a lot of headlines, and the numbers out February 10th contained only mild changes. Markets sold off anyway, though they're trying to firm today. What are the highlights from the report, Bob?
USDA raised by 75 million bushels corn used for ethanol and trimmed ending stocks by 50 million bushels. However, it kept exports unchanged. U.S. soybean ending stocks were cut by 25 million bushels as exports and the domestic crush were increased. Wheat ending stocks were raised by 5 million bushels, largely due to the drop in exports. Price and freight costs, of course, have prevented U.S. wheat from being competitive with foreign origins in export markets. Globally, there is plenty of corn and wheat, with U.S. and Europe contributing to the larger corn production, while China, Europe, and the former Soviet states producing more wheat.
Wheat took the biggest hit from the report, with futures at all three markets breaking below February channels. With the 2014 crop marketing year winding down, the best hope for rallies now comes from weather. Crop ratings for January, reported by key states, shows winter wheat deteriorated last month in Kansas, Oklahoma, Colorado, and Montana, with generally dry and unusually warm conditions combining with earlier winter kill. Even though U.S. carryout could fall in 2015, there's still plenty of wheat available around the world, keeping prices under pressure. Old crop corn looks on track to follow its normal seasonal trend, firming off the late January low. Old crop stocks could get a little tighter, but they're still very adequate. As a result, the trade continues to turn its attention to acreage. USDA will put out another statistical forecast next week on that front, and we'll be starting our next Farm Futures survey soon. My research shows the projected 2015 stocks-to-use ratio for corn is tight enough to generate rallies this spring and summer that could get futures back at least to fall highs. Still, December futures remain unprofitable at current price levels. Soybeans are trying to carve out a bottom, with all eyes on South America. Bob, you spent more than a week in Brazil. How are the crops faring there?
Traveled through Paraná, Brazil's number 2 soybean state, where fields are doing well. A short dry spell preceded my arrival, but rain fell pretty much every day while I was there. In the west end of the state, we did see some fields stressed by dry conditions, but otherwise the crops were a healthy, dark green. We were told fields in top producer Mato Grosso are doing well, although we did not see that firsthand. Brazil's biggest problem continues to be transportation. The majority of soybeans are shipped by truck, which is much more expensive than barge or rail. We were told there, that Brazil's field-to-port transportation costs are some of the highest in the world. The roads I saw, however, were in excellent condition, but they were crowded with very large semi-trucks hauling crops, fertilizer, and other goods.
Even with another increase in soybean acreage this spring, strong demand should keep the stocks-to-use ratio for 2015 from becoming historically burdensome. That gives the market at least a fighting chance to get back to December highs. But another good crop could sink prices back towards $8.50 or less, creating plenty of risk for growers. Noise from outside markets is another concern. Fighting in Ukraine and Greek debt problems continue to support the dollar. Both index funds, typically from pensions and institutional investors, and big speculators have cut their holdings in agriculture, draining funds from the market. Slowing growth in China feeds those worries. Trade data in January showed more weakness there. One reason a closely watched freight index hit an all-time low this week. Yet even as shipping costs make exports more attractive, a labor dispute is threatening shipments. What's the latest on the West Coast problems, Bob?
The West Coast labor problems do not seem to end. Slowdowns will continue until settlement is reached, and I don't know when that will be. A recent work slowdown is over, and ports are now said to be back in full operation. Talks between shippers and port workers are set to resume this week, but a breakthrough does not appear likely. For agriculture, the hardest hit appears to be containerized grain shipments to Asia from the California ports. Containerized grain shipments account for about 10% of total U.S. grain exports. Bulk grain mainly goes out of Portland and New Orleans.
Well, thanks, Bob. You're headed to USDA's Outlook Conference next week in Washington. We'll be back with more on the prospects for 2015 on the next edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash or we'll have to sell you out.